Number 15 of the year, starting off and having a look at the inflation expectation break even. Currently coming off a little bit from the recent highs. I've overlaid this with CAD JPY, as currently the oil market is stalling. I felt like it would be a great way to put these two together to really understand the dynamics that's driving CAD JPY in the very short term. It is currently causing it to hold back on further rise. Depending where yields are headed and how inflation expectations are playing out, obviously CAD JPY will find its next leg higher or lower accordingly. Right now, ahead of CPI next week, we are in a wait and see mode. Everything is expected to run a little bit hotter than usual, but really what we're looking for is what happens after that. And by the looks of it right now, there isn't a lot of inflation coming through in the long term to medium term. So I think CAD JPY has got a little bit lower to come eventually. Very immediate in the next week, probably a little bit more upside. Also going to show you it with USDJPY, because I believe USDJPY got another up leg coming in the very early in the week. I think we have maybe a good 50 pips to maybe a little bit more to start threatening 111 on USDJPY, but because yields are in the short term capped, that whole scenario should wrap itself up very quickly. Quick look at the CFTC report. Euro longs reduced the positions again, so somewhat neutral area, and none of the other pairs are extreme in any of the higher or lower percentiles. Now I'm using Danske Bank's CFTC report analysis. Usually I use Scotia. Thought maybe we can change it a little bit, have a look at a different format. But the explanations and the narrative is the same. So we're looking at extremes, we're looking at reasons why is one speculative group long or short a particular asset. Two, if they are too long, could we squeeze them like we did shorting EURUSD probably the last couple of months. That's why this was too stretched. Now they're falling back to neutral levels. So at this point, looking at CFTC report, there's no particular speculative positioning that is vulnerable. Hence, larger moves I probably have to wait until there's a new build-up. That does not mean we won't have volatility. We have a lot of volatility next week. There's so many data through which we'll be going through just now. The first asset I like to look at, and I'm very bearish on, is AUDNZD. Now, Australian dollar against New Zealand dollar, there is two very defining things that's driving this pair. On one end, you have the Australian banks, so the RBA central bank, and on the other hand, you have RBNZ. Them two are a little bit at the other ends of where they are, the monetary policy are driving. Both trying to keep the rates low. However, RBNZ is a bit struggling with rates because house prices are exploding. On the other hand, the RBA is actually active in the bond market, trying to keep the 3-year yield low, and they are spending Australian dollars. So in the long term, I'm very keen to see AUDNZD top out for the remainder of the year very soon. Now, the way Forex market works, you probably know best yourself. Nailing the exact tops and bottoms can get very difficult. The majority of the moves is probably easier to understand where and what direction they happen. Exactly what price or what time can get a little bit trickier. Now, ahead of the RBNZ meeting next week, on Wednesday, I like to establish a short ahead of that. I'm going to show you what happened to the last few meetings beforehand. So on the 24th of February, we had a meeting and AUDNZD managed to decline. So one or 2 days before, it was a bit more stalling, and then it mounted a good decline of well over 100 pips past the day of the RBNZ meeting as well. The meeting before that was the 11th of November. Let's see what prices did back then. So 11th of November, the day itself, we had a good down sharp move, and 1 or 2 days beforehand, actually the move already started, and it was a proper stretch. And 23rd of September, it's a bit more sampling. Seems to be a good track record where RBNZ meetings is causing AUDNZD to decline. Now, that is not the only reason between these two central banks' divergences why I like to short this pair. Another of the reasons is also if you have a look at the short-term yield spread divergence. And do apologize, I go a little bit more detail about this because explaining this will help you a lot in the future when you have a look at any central bank meeting to be able to create a framework and be able to, what's the word I'm looking for? To be able to come up with a good trade idea based on logic and facts. What I've punched in here is basically the short-term yield of the Australian economy against the short-term yield of the New Zealand economy, and that will give me a chart that looks like this. And now what happens in the currency market is that 9 out of 10 times ahead of central bank meetings, you find that the FX pair, which you see in orange, will be closer to where the yield spread is trading. And you can clearly see here, I don't even need to draw any lines, you can clearly see there's a divergence here emerging. And in the past, these things were always moving together, and every time there was a divergence, you'll find that the FX pair starts trending back down into it, with a little bit of a lag, which creates an opportunity for you to get into it as well. I'm just eyeballing it here, but here, for instance, 2017 February, we clearly had spreads moving lower, but AUDNZD was sitting way too high and it collapsed near to 500 pips. Same scenario here again, so we had yield spreads sitting lower, FX moved way too far ahead, eventually did collapse from peak to throw well over 600 pips, and so on and so forth. So now we have this scenario again, and with yield spreads diverging, you obviously know, okay, look, the direction for AUDNZD is very obviously lower, or there's a higher chance for this to go down dramatically before going up. The tricky bit is about, again, Forex trading, you're never very certain exactly when all of this will happen. It becomes more of an investment tool rather than trying to pick day trades out of this. However, looking at what RBNZ statement looks like, the price action around these dates, I'm a bit more confident that we can start thinking about shorting even as early as Monday from these price levels of 1.0822, with hopefully a tighter stop about 50 or 60 pips. I'm hoping we can capture a little bit more downside. Not a dramatic in the first week. I'm not expecting a huge dramatic 200-300 pip move, but if we can get a good 80 pips, 100 pips out of that, honestly, for AUDNZD, there is a job good done. Again, so early in the week, but also marked down yearly open that tends to act as a magnet for these commodity currencies. So early in the week, I'm hoping to keep my stop somewhere above 1.087, which from the current price, where it closed on Friday, will be about 50 pips. I try to see as much as I can squeeze out of that comes closer to the yearly open. Two of the key reasons, again, being that the RBA and RBNZ are on a divergent path. 1-2 yield spread, short-term yield spread divergence is definitely pointing lower. So I've got two good factors in my favor that is telling me that AUDNZD will come down. Small factor again is that possibly the timing could be a little bit off, as timing things in Forex market can get tricky sometimes, but overall trend, you know, looking at the major things, you know, it's heading down. Just to that, I believe I labored the point. Another thing I like to look at is EURUSD. And EURUSD done an incredible comeback it built on the comeback from last week. We're looking at the 8-hour chart. I was looking to actually short from around this area last week. I've changed my mind. There is something happening in the bond market, actually specifically to the US 10-year bond market, that the yields are starting to come off. And one of the main reasons EURUSD was actually climbing down since the beginning of January was because of that yield continuously rising. Now that it stopped rising and probably starting to stall and move a little bit lower, you could expect EURUSD to comfortably climb above this level and start threatening a 120. So that is the sort of thing I'm looking at next week. Now, when are we going to time this? We're going to time it around the CPI read for the United States, which is the most important single data you will see in the Forex market every month. If you start your trading FX, they probably told you NFP is the most important data point, which it probably is, But in terms of price action, NFP doesn't do anything for you. You probably have seen that heart rate monitor price action that many people started to make as a meme on Twitter, basically saying that the price action will bounce up and down or will just neutralize itself on the same day. There's not a lot you can work with the NFP price action, but the price action you can work with coming after the CPI brief from the United States, it is huge, the sort of implications it has, specifically on pairs I've noticed like GBP USD. However, my focus right now is Euro USD. Let's have a quick look at the past few reads, again a bit more sampling here. So on the 10th of March we had a CPI read and Euro USD was trading around here and then started coming off dramatically. On the 10th of February we had more or less the same scenario. It started moving up and then came off dramatically. Actually, we had another rebound towards the end of the month. So that wasn't really a good top indicator, probably here. Maybe more a bit of a short-term thing. And the read before that was the 13th of January, which was around here. It gave you a straight sort of a topish view that did not climb back. I also like to have a quick look at the 10th of December and why, and I'll tell you in a moment. So 10th of December was a good indicator. It started the bottom out phase here for EURUSD towards the very beginning of January. Now, if you recall, I said all so far this year, starting January, US yields started climbing aggressively, and now they came to a point where they won't anymore. So all these moves coming with the CPI report was the ideal place to start keep anticipating swing trade shorts in EURUSD. I've also had a look at December one where we didn't have the issue with the US yields, and you've noticed that the CPI read was actually a great springboard to start going long. Currently I believe we're in a sort of a flip point as we are in April, and it is my understanding as yields stalling and starting to come off slightly around the CPI read. Allow 13th, 14th or 15th of April, allow 1 or 2 days, and keep an eye on your daily candles to get a bit of a clue here. But base case is really that we will be rallying in EURUSD around these dates where you can start establishing a long position with a very conservative stop to be able to attack 120. Now that is a base case scenario. There's a couple of things that will change that. Probably people from there could be political issues in Europe arising. ECB members might come out and give out comments that will start accelerating the downside again. US yields could start rallying beyond the 175 level. So let me bring up the chart. Because once we know all the things that could go wrong, we have a better way of monitoring things. So right now the understanding is that 1.75 is about the top for now. Actually, I am very confident we're going to see 150 before we're going to see any highs anymore. So that all plays into that narrative that coming with the CPI read, maybe even we have a little bit of an upside move on Monday, but going closer towards Tuesday and Wednesday and Thursday, I'm starting to establish that this comes down and then start thinking long EURUSD. Again, a little bit longer explanation. Reason being is that these dynamics, they just keep repeating themselves over years and decades, and I've been seeing them play out so many times. I just wanted to bring a little bit more into the narrative that when you know about it now, next time you see it, you will be able to capitalize it again and know where the trends are heading. Timing issues obviously with Forex remains, but timing things with stops and what time of a day and what day in the week you are trading could obviously change the outcome of your trade ideas. However, your analysis will be more or less spot on when you follow these ideas. We're following the bond yields, following specific dates, and particularly the CPI reads every single month. Again, when you start a Forex, probably everybody told you NFP is the most important one. It probably is, but in terms of price action, CPI is always king across all USD major pairs. Now we covered AUDNZD, we covered EURUSD, we've talked about what yields are looking to do in the short term. We have a top in a 175, looking to capture 150. That's two things I looked at. There's another thing I like to look at, which is USDJPY. Some interesting happens with USDJPY ahead of US auctions every single month. So you have a US 10-year bond auction, and ahead of these auctions, what you get is a phenomenon which is called supply concession. Basically what happens is market tries to drive up the yield ahead of these auctions, so when they start bidding, they obviously get better prices where the government will have to pay them out. Ahead of these, 1 or 2 days, sometimes even hours ahead of these, you will find that yields rally. USDJPY sometimes rallies with it as well. So there's a small intraday move here we can capitalize on quite early in the week. And again, we do a little bit of sampling, have a look at what past weeks did. I'm going to even drill down to shorter time frames to give us a better understanding. So the last 10-year auction we had was the 10th of March. Going back here, we would have been trading around, so 10th of March was here, and you see the supply concession was actually the week before it, a couple of days actually before it, and then on the 9th, it kind of topped out when we got into the 10th, the auction itself. On the 10th of February, interesting to see how that played out. So 10th of February, we had you probably had your auction around here, and you saw the topping out actually happening on the 9th and the 8th. And let's have another look at the 12th of January. And 12th of January, actually the top happened on the day of the couple of hours before the auction itself. What I'm trying to make is you tend to get to see those rallies ahead of these important auctions. Again, commonly known as supply concession. So what I'm looking for next week is that sort of same dynamic. Either try to capture an early move in the London session, or later on post London fix. Whichever it is ahead of this, I will interested to see if we can capture a little bit more upside, even sometimes post the auction, a little bit more upside USDJPY, definitely threatening the 110 level, even possibly a little bit higher. That could all change if the US 10-year yields start absolutely smashing lower, obviously, which I'm not expecting quite early in the week, as we have a lot of good data, which I'll be going through in a quick moment. Again, main thing to look out for is where yields are headed, but ahead of the bond auction, I would like all of this to just capture a little bit more upside to make the auctions more favorable for all the bidders as well. So we talked about that. Let's have a quick look at what sort of data are important for next week. We have a lot of Fed speakers coming out next week, which we're not expecting for them to say anything new, a little bit more reiterating what they already told us, that they are reactionary to all the data points that are coming. CPI could go anywhere it wants to go. They really would want to wait for several quarters for this to play out, so I'm not expecting a lot of movement from the Fed side. Starting on Monday, we have again the 10-year bond auction I'll be looking at ahead of it, and beyond it I'm really looking for USDJPY to capture at least 50-60 pips, some in those areas. And going on to Tuesday, most important data point is the CPI. I'll be looking for price action on the daily charts on the 13th, 14th, or 15th to give us clue, specifically actually on dollar pairs, ideally EURUSD on the upside. We have good data through on GBP. I will be refraining from analyzing GBP right now. There is a little bit of there's a dynamic happening in the background which we are not sure about, where there's rumor basically that Deutsche Bank is buying Euro GBP because they need to have some sort of a transaction and they need warehousing those currencies, and that is driving up Euro GBP a lot and makes a lot of the moves impossible to trade. I'm not particularly bullish on GBP anymore, one of those reasons, and the other one is there's a lot of good news already priced in, but I will refrain from analyzing GBP in too much details because I think it will be more of a follower than a leader in the coming week. Again, so Tuesday we have CPI data to look out for. On Wednesday we have in the early hours RBNZ meeting, which I'm hoping before the days leading up to the RBNZ meeting and on the day itself, AUDNZD catches some decent downside, anything between 80 70 pips or so. If you can catch that comfortably, I think there is a job good done. Going towards the middle of the day on Wednesday, Fed Powell speaks again. Again, not expecting anything new. Lagarde speaks again, not expecting anything hugely new, but we'll be eyeing to see if there's opportunity arising to buy EURUSD. Going to Thursday, we have employment data for the Australian dollar. That is a wait and see moment for me. It is expected that employment is a little bit slowing down, and I'm hoping that will also cause AUDNZD to move a little bit lower. We have US retail sales, which will be main mover for commodity currencies, but also actually for the S&P 500 indices. That is more a thing I will be analyzing during the day, as we are a little bit stretched on S&P 500 on the indices. I'll be more interested to see what the theme is, to see if there's anything coming out of it going actually into Friday. Now, a lot of you are probably looking at the GDP numbers for China and thinking, oh, that could be good for Australia or it could be bad for Australia. In my experiences, these GDP numbers, they're always well known. So the numbers itself won't actually help or drag AUD lower or higher. Really what comes beyond that, it is the understanding that China was trying to cut down on the steel production, which is not a good thing for Australia. Also, China is cutting back down on loans, so they're tightening the financial credit a little bit, which should help the yuan more or less. And again, from my experience, the data itself won't hugely make any huge changes on the AUD. What you might find is that it makes an extreme move just to reverse after that. But our clue will be coming from after the retail sales on the Thursday to see what the theme is on Friday, to explore what trades are coming up on that day and also setting up for the following week. This was a little bit longer video. I had to explain two very big major dynamics in the Forex market. One about the short-term yield spreads and the AUDNZD happening next week, and how you can exploit that ahead of central bank meetings. The other one we had a look at is what was driving EURUSD for the last three months, and why it could be changing in the short term with US 10-year yields topping out. We also had a look at what the supply concession means ahead of these bond auctions and how USDJPY could react to some of these. So again, covered a lot of these things, but you will be able to use these in the future again many times. Wishing you great success for the following week, and that is the end of this video. Thank you very much.